Back in the day, if you needed eggs or wanted to order oil or needed something urgently, you had to make a list, go out and buy it. But today, we heavily rely on our mobile phones, which is our 11th finger, to order something, and quick delivery platforms and quick commerce platforms provided in a matter of minutes. 10 to be precise. One such quick commerce app delivering groceries, personal care, electronics in a matter of 10 minutes is Zepto. The company has recently launched as well a farmer engagement program called Zepto Bloom. We've got Aadit Palicha, who's the co-founder and CEO at Zepto, now joining in. And thanks so much, Aadit, for taking time out. People like us in the next gen are definitely addicted to this quick commerce platform, and there are also estimates that the quick commerce market could touch $5.5 billion by the year 2025. What's your outlook on how Zepto really plans to capitalize on this boom?
Yeah, no, absolutely. And it's wonderful to be here. Thanks for having me. For us right now, I think the focus is, we're realizing that the market potential is incredible. People are, once they get used to a service like this, spend a significant amount of their grocery wallet share consistently, multiple times a week, in many cases, close to a dozen times a month for our most, for our most aggressive users. So we think that the opportunity in grocery, getting to a deep amount of wallet share for customers is massive. For us right now, the focus is, continuing to execute as well as we can on the 4 different pillars of customer experience that matter to us, right? For us, that's speed, quality, assortment, and price. And, we're pushing to get, lower delivery times even faster than the ones that they are right now. We're pushing to do, deliveries with better quality, more consistently. We're getting, we're expanding our assortment consistently month on month, and we're trying to give customers a better price and a better bang for their buck. So that's our strategy, very simple. And we're hopefully, if we nail all those, 4 of those things, we'll be in a position where we can get the maximum amount of wallet share from the customers that are with us today and the customers that we're hoping to bring on board tomorrow.
But Adit, at the same time, it does remain a bit of a concern that it's a bit of a cash guzzling model. What's the outlook when it comes to profitability for the company?
Look, I think, outside in, there's obviously been a lot of, media attention, not just on the growth of the business model, but also on unit economics. Transparently, as someone that's operating the business day to day and has got a lot of depth on, where, our supply chain costs are, how much revenue are we making per order, what's the, margin structure that we're operating at today, I can tell you that we're actually in a much better position on unit economics and profitability than most people would assume outside in. In fact, today we're actually turning hundreds of dark stores fully loaded cash flow positive faster than offline supermarkets turn profitable in India. So if you look at a Zepto dark store today, it's turning profitable, 4 to 6 months sooner than the benchmarks for offline supermarkets, right? And so right now we look at this company and say, okay, we're an 18-month-old company. Obviously company level profitability is a function of maturity, but are the inputs on profitability working? Are we turning dark stores fully loaded cash flow positive? Are those dark stores continuing to grow after they turn profitable, right? And for us, that's, in a very, very good place right now. And so, to answer your question, I think it's a function of, deep execution, both in your supply chain, having tremendous discipline across all the costs that you can incur on a supply chain, and also having a deep understanding of how to generate, more margin and more average order values from your customer. But if you execute with a lot of rigor and a lot of clarity, you'll be in a position where you can turn this business into not only a profitable business, but a business that so far is looking to be even better than more conventional business models like, offline supermarkets. And so yeah, we're incredibly excited about the unit economics potential here. I know it's, not exactly the popular narrative, but, with someone that's an insider that's got a lot more depth on the numbers than I think the outsiders have, I can tell you that we're in a pretty good place.
All right, we'll await a little bit more clarity on that down the line, but let's talk about the latest venture, a farmer engagement program. So what exactly is this app, Zepto Bloom? It's going to, I understand, digitize processes right from sowing to selling?
Yeah, absolutely. Look, I think, at Zepto, we're fundamentally a supply chain business, right? And that's the way that we look at us, through and through from, not just from the farmer's end, but across the entire grocery chain. And so for us, the farmer side of the business is critical, keeping those suppliers excited, and that's where we generate most of our value. We launched an initiative, Zepto Bloom, which is a dedicated app for the farmers that we're working with today, where we source fresh fruits and vegetables from, and even other items that fit into the grocery basket. Today, Zepto Bloom helps farmers, from everything to receiving payments on time, giving them access to, banking solutions that they might not have had access to in the past. It helps them, it even gives them a lot of price clarity. Right now, one of the biggest problem statements we've had, even, when I've personally spoken to, farmers today, they tell me that, price visibility and clarity is a big problem. And so we're trying to solve that opacity with an app that gives people a live sense of what's happening in the market right now.
So just to understand a little bit better, how many cities you currently present in, how many dark stores do you have, and what are the categories that you're currently delivering within that short time frame?
Yeah, so look, we are live in almost every major city in the country: Bombay, Bangalore, Delhi, NCR, Hyderabad, Chennai, Pune, Kolkata. We're bigger in certain areas than we are in areas like Kolkata, where we're hoping to expand and sort of increase our coverage. But that's where we are live right now. We're in a position where we've got a few hundred dark stores, each of which are delivering everything from fresh fruits and vegetables to your cooking essentials, dal, chawal, atta, to snacks and drinks like Lay's chips and Coca-Cola, all the way to even today, household electronics, beauty and makeup products, and many, many more categories. And we've got over 5,000 products across all the dark stores that we have on the platform today. And yeah, that's the scale of the business directionally.
Got it. And you were talking about the overall unit economics improving. So is it a fairly high cost for operating these dark stores? And is it a worry about inflationary concerns? Is that going to be a bit of a dampener for the company down the line? And what kind of an inventory model is it that you really work with?
Yeah, look, I think to give you a sense on like the cost structure of operating a dark store, it's it's fundamentally like any capex intensive business. I think for us, we make an investment, set up a new facility. As that facility is scaling up, there are sort of dark store level EBITDA losses that you take. But once it hits a certain scale and maturity, right, and once you get to a point where you've got volume to cover your fixed costs, and on top of that, you've optimized your variable costs with, again, a lot of rigorous execution, everything from the utilization that you can drive on your last mile delivery, to the wastage management you can do with best in class forecasting, to the sourcing efficiency you can drive, right, by having your own supply chain that goes into a lot of depth, like the farmers, like straight to farmers, the example that we were just talking about before. If you sort of optimize your entire variable cost supply chain and you're able to get enough utilization and maturity in your dark stores, within a certain period, the stores start turning profitable and start paying back that initial investment. And so, like I mentioned today, we've turned, we're in fact on the verge of turning hundreds of dark stores fully cash flow positive. And we're feeling quite good about the way the payback periods are shaping up and how the business is actually materializing. In terms of the question on how we actually look at the inflationary macro environment right now. See, look, I mean, fundamentally for us, we are a company that has a little bit of an advantage because we're working in sort of consumer essentials and mainly sort of packaged food products and fresh fruits and vegetables. What we've seen actually, I mean, if you look at the overall macro environment, consumer fundamentals are deteriorating in other parts of the world. What we're seeing, at least at the scale that we have of hundreds of thousands of orders per day, is that consumers seem to actually strengthening. They're spending more and more with us month on month.
And how are you looking to further, expand the dark stores? What's the plan in terms of targets?
So look, I mean, I think from our point of view, we're sitting in a position where our existing dark stores are growing in a pretty healthy way. Right now, we're growing. If you look at our year-on-year growth rate at a company, the annualized growth rate that we're forecasting will probably grow multiples this year, not percentages, not 40%, 50% year-on growth. Will probably multiply 2 to 3x, if not more. And yeah, I mean, I think it's a function of how much depth we can get in our existing dark stores, and then once those dark stores cap out, how many more dark stores do we need to launch to continue the growth trajectory? And so, from our point of view right now, we are planning to launch dark stores, hopefully by the second half of this year. The idea would be, again, to focus more on more on building depth within our existing markets than launching tons of new markets in the short term. And yeah, I mean, I think we'll probably launch a couple dozen dark stores a quarter, starting second half next year. So that's the objective.
Just to understand it better, what is the average order value at the moment and how has it grown from the start? And do you think that it could scale up further? Are you seeing that sort of a trend in terms of what you've observed? Are the consumers buying trends and patterns and behaviors?
Yeah, look, I mean, so our average order value today is around 400 rupees and it's continuing to scale up. And I think what most people don't understand about average order value, right, is that if you look at that number in isolation, it gives you a very different picture of what actually is the right, it gives you a very different picture of what's actually the nuance in the P&L, right? Because if you look at average order value in isolation, it doesn't flow down into your P&L. What really flows down into P&L is the margin that you make times the average order value, right? So today, if I'm sitting on, let's say, 1,000 rupee oil order, right, 1,000 rupee order of cooking oil and cooking essentials, right? I might only make 3-4% margin on it, but my AOV will be 1,000 rupees, my average order value, right? Versus if I'm doing a 350 rupee order of fresh fruits and vegetables, right? The margin that can be made, from the dark store partners we're working with, right? The margin that can be made on that order is 35-38%. And so I'd actually prefer the 350 rupee order of fresh fruits and vegetables than the 1,000 rupee oil order. And so right now, the way that we look at it is not just from an average order value perspective, but we're looking at how our customers are maturing. Obviously, they've increased their basket sizes pretty significantly from the beginning, right? I think average order value has grown by about 60% in the past 12 months, and it's continuing to grow month on month. On top of that, we're sitting in a world where the kinds of categories that customers are buying are skewing more and more towards higher margin categories. And when you look at the net product of that, right, your average order value and the net margin that you're making, right, that for us is more than 3x in the past 12 months, right? And so yeah, that margin times average order value, dynamic is critical. Obviously, we're working with our dark store partners day in and day out to see how we can get more and more efficiency there. We can give more categories to customers and push more demand towards the categories that we're excited about. And yeah, I mean, it seems to be working. And hopefully, the dark store partners that we have will continue delivering the results that we've gotten.
Adit, we did see, of course, that big boom in the year 2021 where India ordered close to $5.5 billion worth of groceries online and the hyper-quick delivery programs really worked well. Has there been any impact on the back of the funding winter whatsoever in terms of Zepto's operations?
No, there hasn't. I think we're in a position where we're pretty well capitalized. We just a couple of months ago raised $200 million from some pretty best-in-class investors or decent investors that we're proud to have on our cap table. And yeah, I mean, I think we've just continued to grow since then. So not really impacted us as much. Obviously, it's a function of continue to deliver on cost excellence. So that's what we're focusing on. And since funding has slowed down, there is obviously deeper and deeper focus on profitability. And I can absolutely say that we've not just after the funding winter, but frankly since the beginning, we've been trying to drive more and more efficiency every month. And so yeah, I mean, that obviously has been a renewed effort. But other than that, no real substantial changes to our operations, our growth, the plan that we have for the next year or so. So I truly believe that you won't be able to build this business in the right way unless you not only have strong tech on the customer side so that you can build a great customer experience, but also on the back end, right? How you're what's the tech and processes you're building to make sure that your internal muscle and your internal operating capabilities are getting updated every month. And so yeah, I mean, I think we've continued to focus on building as much tech as we possibly can in-house. We've got a team of over 100 engineers and product folks working with us in our tech HQ in Bangalore. And so yeah, I mean, I think that's been a renewed focus from our it's been a focus for us since day one to continue to be a focus for us going forward. And I also feel that right now we're making a bigger and bigger push towards just building in-house, right? Building the right process in-house and getting the right, any dependency that we have on an external stakeholder, right? We want to figure out either how can we enable that stakeholder to deliver more value for us, or how can we build a better version of that product in-house, right? And so yeah, that's a focus for us, and tech will be a bigger part of the puzzle going forward.
All right, Aadit, we'll let you go on that note. Thanks much for taking time out and joining in on Startup Central.
Thank you.